Apple just dropped its latest earnings report, and as always, Wall Street is buzzing. We're seeing beats, misses, and a massive move with a $100 billion stock buyback. But what does it all really mean for investors like you? Should you be excited or worried? Stick with Dividend Dreamer as we break it all down in simple, clear terms, without the financial jargon. This could be a game-changing quarter for Apple shareholders. Apple has officially reported its fiscal second quarter results, and the headline numbers are starting to make waves. Let's get right into the details. Apple's total revenue came in at $95.36 billion, just edging past analyst expectations of $94.6 billion. That's a positive sign, showing Apple still has solid momentum in its core business lines. As for earnings per share, Apple posted 1.65, slightly higher than the expected 1.62. Now let's take a look at one of Apple's key markets, Greater China. Here, Apple brought in $16 billion in revenue, which is a bit disappointing compared to the expected $16.83 billion. This shortfall raises concerns about Apple's foothold in China, a region that's been both a goldmine and a challenge over recent years. On the bright side, Apple is rewarding its investors. The company has officially increased its dividend, staying true to expectations. Plus, and this is huge, they've approved a jaw-dropping $100 billion share buyback plan. That kind of move signals strong confidence in the company's future and helps drive up shareholder value. Shifting gears to Apple's star product, the iPhone. Revenue from iPhones during the quarter reached $46.8 billion. That's above the $45.94 billion analysts were looking for. There's speculation that many consumers rush to buy iPhones ahead of possible changes tied to app regulations. Still, the year-over-year growth here is just 1.9%, suggesting that while sales are solid, explosive growth in this area may be slowing. Speaking of spending, Apple's cash and cash equivalents have declined by about 14% compared to the same time last year. That brings their cash pile to $32.73 billion. While that's still a massive amount of money, it does point to increased investments or higher costs eating into their reserves. On the services side, Apple delivered a surprise. Services revenue jumped 12%, a bright spot in this earnings report. Think about Apple Music, iCloud, the App Store. These are all part of that growing ecosystem. It's clear Apple is doubling down on services, and that's key for long-term stability. As for gross margins, they're staying steady compared to previous quarters. That means Apple is still efficient in how it operates and maintains profitability. Caroline Hyde, co-host of Bloomberg Technology, weighed in with her initial take. According to her, these numbers are decent on the surface, but the big unknown is forward-looking guidance, and that's always the elephant in the room. Apple doesn't include guidance in its press release, so everyone's now waiting for what's said on the earnings call. Looking closer at China again, Apple's performance there remains a bit soft. The $46.8 billion in iPhone revenue is encouraging, but it might reflect customers buying ahead of potential changes, rather than strong ongoing demand. Apple is trying to reassure investors with buybacks and dividends, essentially saying, "We've got you." But the details matter, especially when you consider that the iPhone 16e, a more affordable model with many of the same features as the standard iPhone 16, might actually be cannibalizing sales of higher-end models. That brings us to another issue, upgrade cycles. iPhones are now more durable and powerful than ever. That means people hold on to them longer. So even with decent sales, growth is modest. And while Apple's been hyping up new AI features, many feel the company is lagging behind competitors in that space. Siri, for example, hasn't exactly sparked a rush to upgrade. That's why Apple's services business is so important. It creates recurring revenue and keeps users locked into the Apple ecosystem, even if they aren't buying a new iPhone every year. The CFO pointed this out in their statement, emphasizing the massive number of Apple devices already in people's hands. With service revenues roughly meeting expectations and iPhone sales showing slight growth, Apple's near-term future hinges on how it continues to balance hardware with recurring services. Can they keep increasing service prices? Will users keep spending even if they don't upgrade devices? Only time will tell. But for now, Apple seems to be walking a fine line between strong fundamentals and a rapidly changing tech landscape. That's the full breakdown of Apple's latest earnings here at Dividend Dreamer. If you found this update helpful, hit that like button and subscribe for more easy-to-understand financial updates that help you stay ahead of the market. Thanks for watching, and we'll see you in the next one.